Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about Crowdstrike, ticker symbol CRWD. All right, so for today's agenda on Crowdstrike, we're going to go over 2021 Q1 results. We're going to look at the stock price history and how, if you were in it 15 months ago, you're sitting pretty happy right now. What's it going to look like moving forward? We're going to look at the fundamentals and the financials surrounding Crowdstrike. We're going to look at shares outstanding, make sure that's not expanding too much. I'm going to try to come up with a price target for Crowdstrike, and then I'm going to give my thoughts on Crowdstrike as an investment and any strategies that may be useful. Hey, you want to do me a favor? Hit that like button. It helps me out a ton with the algorithm. Also subscribe if you haven't already. Thank you so much. Back to the content. So Crowdstrike released their fiscal year 2022, yes, to fiscal year 2022, Q1 results last Thursday, June 3rd. The results came in at 10 cents on the earnings per share. The analyst had them at 6 cents, so they beat by 4 cents, or about 66% beat on their earnings per share. On the revenue side, they brought in $302 million. On the analyst side, they expected $291. And so that's a beat of $11.07 million, or a 3.8% beat on revenue. So really good results here, especially on the earnings per share side, huge beat there. All right, so jumping into the fiscal year 2022 first quarter press release, if we scroll down here into the revenue side, yes, they had $303 million revenue, 70% increase, love to see that. This annual reoccurring revenue and subscription gross margin, the thing about the ARR is this is reoccurring revenue, so that's really good to have in a business, consistent revenues that you can anticipate year over year, and that coincides with the very close to that increase in total revenue that they had in the quarter. So that's good to see that it's actually a higher percentage than the total. The subscription gross margin, that's at 77%. That's excellent compared to some of the previous quarters. It's not super higher, but it's definitely been growing over the last several quarters. If we scroll down, cash flow, we're going to want to look at this later, but they had $117 million in the first quarter. Cash and cash equivalents at $1.7 billion. And if we scroll down here, I really want to take a look at this full year fiscal guidance that they provided at $1.35 billion for full year FY 2022. So I'm going to use this full year FY 2022 guidance to go in here and anticipate what is their revenue growth year over year. So for the last year, they had $874 million. If we go back here, it is 1.35. So pull up a little calculator. $1.35 billion minus 874 million gives us 476 million increase in revenue, and then we'll divide that over the previous year. That will give us our growth of 54.5%. So right off the bat, that does not look good. I will say that revenue growth from between end of 2017, end of 2018, end of 2019, end of 2020, really strong, over 100%, damn near close to it, dropping by about 10% every year, it seems like. And yeah, 55% is a huge drop off, at least. Still a large increase in revenue, but it is a very, very big drastic difference in what they've been having year over year in terms of growth. So that is definitely something you want to keep and pay attention to. But they gave that guidance, so I feel like they're fairly confident with that number. So definitely factor that into your DCFs and your different valuation models. So that's going to be very important in order to calculate how much Crowdstrike is worth. All right, so if we look at Crowdstrike since around its IPO in June of 2019, we can see that it's been up 233% since then. So if you got it at the IPO, you're sitting pretty happy right now. You're up 200, it's a two-bagger for you, so you're doing really good. If you got this at the high right after the IPO, it ran up pretty high, you're still up 122%. So you're still pretty happy, I'd say. If you got it pre-pandemic, in February of 2020, you're up 258%. If you got it at the lowest low, on that was probably March 23rd. What is this? March 13th. You got it. You're up 440%. So you're even happier. Now, if you got it at this high, you're down 11. This is 11%. It looks like, yeah, 11%. So one of the things here is that it has had a pretty dang good rise in the last 15 months, and that's one thing that causes me pause. Like, it's had a really good run. What is going to drive its growth moving forward? What are some of the key drivers there? So what we need to look at is revenue growth, margin, free cash flow. We need to look at some of the financials and just make sure that that's there. Make sure that shares outstanding isn't increasing, all those things. So without any further ado, let's dive into the financials. As a friendly reminder, please remember to hit that thumbs up button. There are several thumbs up buttons that are very lonely, and you could help one out today by just simply hitting that thumbs up button. Thanks so much for watching. Back to the content. All right, so diving into the revenue side, you can see that they've had really strong revenue over the last 3 or 4 years. As I mentioned earlier, revenue growth is anticipated for FY2022 at 55%. That is full year 2021, real year. For the gross margin, that in the most recent quarter is at 77%, which it says 74 here, but they reported 74% on their financial report. But you can see that these strong margins are continuing to grow. I really like seeing that. Even if you keep going back here, they started in the mid 60s and they're now in the mid 70s. So that's awesome. Really love to see that increase in gross margin. Now, I want to move over to the balance sheet and look at debt. Now, if we look at their most recent quarter, they had $1.7 billion essentially in cash and cash equivalents, $2.8 billion in total assets, current liabilities at 983 minus subtracted from the 1.68, so about $700 million in over the amount that if they needed to pay all their current liabilities, they could, so they'd have $700 million left over. So that's really good, and they have about $800 million more in assets than total liabilities. Also a big check mark there. All right, so if we dive into the statement of cash flows, we can go and look at their last year. You can see that free cash flow has been, or cash from operations has been increasing, and so has free cash flow. In the last year, you could see that total for the year, they had $304 million. That's cash from operations minus capital expenditures equals free cash flow. So real quick math here. We're going to be using this $48.58 billion as what our price to free cash flow is. So 48.58 billion divided by $304 million. That gives us a price to free cash flow of basically 160 price to free cash flow. So that's fairly high. Now let's be a little positive here. Let's be a little bit more optimistic, I should say. Let's go to their most recent quarter. Again, you can see that cash from operations has been consistently growing. Love to see that. Really love to see that. Capital expenditures has been rising slightly, but not crazily. And so in their most recent quarter, they had 148 minus 26, and so they had $122 million in free cash flow. Now, normally you don't annualize this, but I'm going to multiply that by 4 to say, okay, for the next 3 quarters and this one, if everything stayed the same, they've had $488 in free cash flow, $488 million in free cash flow. So if we take that and again use our market cap of $48.58 billion, and divide that by $448 million, which is the free cash flow, we'll get a price to free cash flow of 108. So really high. 108 is still a really high number for price to free cash flow. So we'll want to pay attention to that as we move into future. Definitely want to pay attention to that. All right, so if we move into shares outstanding, you can see that since their inception in June of 2019, they started out with 196 million shares outstanding, had a pretty big increase here. Something happened here, seems like an anomaly. But if you just take that out, there's basically been a staircase of increase in shares outstanding. Real quickly here, we got 225 million minus the 196 over 196 gives us about a 15% increase in shares outstanding over the last, is that 2 years? So don't, it's not terrible. It's not terrible. There's other companies issuing about 7%, but AMC is like diluted by 400 times. There's other companies that are doing a lot worse at diluting shareholders, and with their growth, they're definitely growing at a faster pace than their dilution, so that's good. It definitely concerns me when companies are issuing shares and they're issuing shares at a faster pace than even their growth. So that's not good to see. So not good here. In general, I like to see shares outstanding decreasing, but this is typical, I think, for companies that are giving incentives for employees. They're not really using this for fundraising. I'm pretty sure they're really just using a lot of these shares outstanding probably to incentivize people to work at Crowdstrike. It's how you attract talent really at the beginning. So not super concerning, but definitely not something I like to see. All right, so what are analysts saying about the price target for Crowdstrike? They're saying it's about 251. Over the last year, it's returned about 127%. And still with that amazing return, it still has an upside of about 17% to the price target in the next 12 months. So you can see that there's a pretty big skew here, 175 on the downside, 280 on the, these are the outside ranges. So that's something you want to consider. The one thing I don't know that's worked into these price targets for the analysts that have been calculated in here is that slow in growth. So we have to pay attention to that. So I'm personally taking this with a grain of salt here. All right, so for my thoughts on Crowdstrike, they had a wonderful Q1 of their fiscal 2022. Really good on earnings per share, really good revenue. I like both of those things. Their stock price has just exploded over the last 15 months. If you bought it pre-COVID, you're pretty happy right now. If you bought it in the last 4 months around the high, you've lost some money, but I don't think there's a huge concern here. On the fundamental side, financials, revenue growth has been strong. There has been a decrease in revenue growth year over year. With their fiscal year 2022 full year guidance, they are anticipating growth to slow down to 55% over the last year, 80%. If we look at their gross margin, that's been increasing quarter over quarter, up to 77% for this last quarter. That's excellent. Love that. Also, kind of going back into the earnings, they were saying that their subscription growth was growing, that reoccurring revenue. Love to see that. Consistent cash flow over those years. Talking about free cash flow, that's been consistently growing, and I like to see that. Just looking at their full year cash flow to their estimated free cash flow for the full year, that's a good growth there. As long as their market cap stays the same, that's good strong reduction in that price to free cash flow from 150 to about 99. Now that's some assumptions there, but You got to take it with, you have to make some assumptions when doing this. In terms of their debts, there's nothing out of line there. I like that. There's good assets on the books. The liabilities aren't out of line. Shares outstanding, nothing too concerning here. It is increasing quite consistently, but it's not super substantial, more so than the growth that they're getting. So I'm not 100% concerned here. This is typical, like I mentioned earlier. They incentivize to bring on quality talent through issuing shares and basically giving employees shares so they can participate in the growth of the company. And the price target for this company at 250, that's not mine, that's analyst. I'm not giving a price target for this because I don't own them. I typically only give price targets on stock that I have a ownership in because I create my own for it. I'd be a little concerned at its current stock. I think there's a stock price at 213 to 250. That is a good 17% upside if the price target holds true. However, I don't like seeing forward earnings at 494. Price to free cash flow is still a little high for me. I don't think this is a value company. I think it's a high growth company. And with that, you may have a lot of that growth is already priced into the company. So if you see slowing growth, if you see decrease in revenues, anything on that side, or if hype comes out of the company, I don't think it's a hype stock. I do think it's a legitimate business with good quality clients. Nothing hit to the business side. They good solid business. It just has to perform to its expectations. Otherwise, you could see a big hit in that stock price. Or if the winds change here, you could see outflows in the name. And personally, for me, I have a hard time getting to names like this. Just for that reason alone, because I feel like there's a lot of people jumping onto that train, and I hesitate when I see that. So still a good business. Nothing against Crowdstrike. I definitely think it's worth a look at if you like its core business. If you're into that, I think they will be around for many years to come. I just don't like their price compared to what you have to pay for them on what you're getting back as a shareholder currently. So although they have had good capital appreciation, I just think they've kind of outrun what I'm willing to pay for them personally. So please like, subscribe, let me know down in the comments what you think about CrowdStrike. Thanks so much for watching. Frank Finance, out.